All right, so let's break down. Hey, take a moment to hit that like and subscribe button below and stay up to date with any content that I release. Again, no pressure. All right, so let's break down TSM. So you see here TSM in this image is on the 30-minute time frame. Now the reason why I was looking at TSM is because it gapped up pre-market, as you can see, and the gap in price that we have here from the previous day to where we opened at. So I was looking for a gap and go situation, but I wanted price to pull back to give me entry to the upside. So here, once price broke the high of this candle, then I took entry for calls. And as you can see, price got back to where it previously rejected. It almost touched that same level and it rejected right off of it, pulled all the way back, and it consolidated the rest of the day. Now I held this overnight because it stayed above the 50% level. So if you take the high and low of this day, the 50% level was never touched. So I held this overnight. And as you can see, if you know anatomy of the candle, you know price opened here and went to this highest point before it began to pull back. Now you might be looking at this, you're like, oh, good play, Mo. Glad you held that one overnight. And wrong. I took an L. I took an L on this play. Why did I take an L on this play? Price got up here, rejected, pulled all the way back, and it stayed above the 50% level. Now, my plan when I got into this play was, if price closes below the 50% level, I am getting out of this play. And as you can see, price broke the 50% level, it broke the 61.8, and it closed below both of those levels. So according to my plan, I got out of this play, took a small L. It happens. Now let's look at Intel. Now Intel on the day chart in the 30-minute time frame. Now I was looking at Intel because it was an outside candle on the day. It formed a hammer and it was bouncing off the previous week 50%. Now I saw that. I said, well, I'm going to go to the smaller time frames and I'm going to look for this earlier entry. Now, again, I went down to the 30-minute time frame. I waited for price to pull back to give me entry to the upside. Once price broke the high of this candle, this is where I got into this play at to ride this to the upside. Now, this yellow line is the previous year 50%. Now, most will say, well, why didn't you just wait until price got above that and closed above that level to take it for calls? I definitely could have. You definitely can. But I had a lot of things in my favor, technical analysis wise, that made me believe that we were going to bust through this level. And if it didn't break through that level and decide to pull back, again, I have rules in place if that happens. But I had indices trending to the upside. I had NVIDIA already above the year 50%. I had AMD already above the previous year 50%. I had MU already above the previous year 50%. So this already added to my bias of I'm going to take this play and trust that we're going to break through this level of the previous year 50% to the upside. If it didn't, I would just exit the play. So as you can see, price consolidated here for a good hour, and then it finally broke through. Now, once I saw price retrace, break through the level and retrace back to that year 50, because we know when price breaks a strong level, it's going to retrace to that level and sometimes get back below that level. But once it breaks a level, we know it's going to retrace. So we should expect that. So once I saw it retrace and then it started heading back up to the upside, I was holding this play overnight. It stayed above the 50% of the day also. So that was another reason why I was going to hold this overnight. Now, as you can see, price gapped up, opened here, and closed here. So you're going to say, oh, good play, Mo. It was. So in fear of, not even fear because we don't do fear, and knowing what market did to me on that TSM play to where I could not get out of that play quick enough, I said, I'm going to take profits as soon as I see a rejection. So I took profits here, and I took some profits here, and I let the rest run. Now, I normally don't take, this was a Thursday, so I normally don't take my Thursday plays into Fridays. So I knew I was going to eventually have to close out, but these were just runners. As long as price didn't come back down here somewhere, I was good. So I took the rest of my runners off the table somewhere up here, and I closed out in profit, as you can see here. Now, as you see, the next day opened up, it gapped down. Now, granted, it didn't gap down all the way where I got into this play at, but I did save myself some profits by closing out and sticking to my rules of not taking my Thursday plays, especially weeklies, into Friday. Now, you may be asking yourself, what is the point of you showing us a red trade and a green trade? The answer is your mindset, your mindset, your mindset. It's all about your mindset. Now, you can look at this TSM play and you can say, well, you should have got out when it rejected. And you could possibly be right. And thank you for telling me afterwards. But in that moment, that happened so quickly, I could not get out of that play quick enough. So all I could do is stick to my rules. If price never closed below the 50% level, then I stay in this play. All I could do is shake off this play, learn from it, take what I learned from it, and move on to the next play. That's all I can do. Now you get in the play and take an L, and you might be on your next play and be like, okay, I gotta make this much because of what I lost in the last play. Nah, you can't do that. You can't do that. Right? That's going to cloud your judgment in that play that you're currently in, and it's probably going to set you up for another L. And we don't need another L. We just had one. Right? We can do red plays, but not red days. So you got to shake off that play that you took that L in, learn from it, and move on to the next play. Now, it doesn't matter what you use for your technical analysis strategy, whatever you use to find these high probability setups, the market is still going to do what the market does. Example on this play. This was a great play. Everything was aligned in my favor, but it still went against me. No matter how much the stars align in your favor, the market doesn't care about these stars. It doesn't care. But all you can do is react to what the price is telling you. And we must accept that. That's why we trade the market, not our opinion. Play what we see, not what we feel. Now, let's say this market, let's say you're in the play, let's say you're in SPY. SPY, Monday, at uptrend. Tuesday, uptrend. We get to Wednesday, you say, well, we're clearly in the uptrend. We're clearly in the bull market. I'm going to take calls at open on SPY, right? We've all done it. We all think we know everything, right? So we take SPY for calls. Since the market has been in a clear uptrend, but we see prices heading to the downside. Now, although we see that the market is in the downtrend, going to the downside, we still feel like those previous days matter about what's happening today, and it doesn't matter. We play what we see, not what we feel. Now, instead of getting out of this play, we'll let our ego kick in and we'll say, nah, that's cap. We're in a clear uptrend. But we still see prices breaking levels to the downside. Now, ask yourself in that moment, who are you trying to prove right? Since it's only you and price in that play, do you really think price cares if you prove them wrong? No. No, they do not care. Because you can't prove price wrong. Price is always right. You just want to be on the right side of price. Stop trying to compete with price. Stop trying to compete with the market. Play on the team. Stop trying to be competitive. We play what we see, not what we think. The hardest part of trading is the mindset. I'll keep saying it over and over again until we all get it. The mindset is the hardest part, and that is my main focus when I share this content with you guys. This is the hardest part. Once we can get past this part, I promise you we're not going to be a part of the 99% that fail, but we just got to create winning habits that's going to set us up to be successful traders. You can watch all the trading videos you want on how to flip $50 into $1 million. You can. You can buy all these indicators and strategies that say that you can make all this money. You definitely can. But if your mindset is off just to buy a little, it doesn't matter what you're buying. It doesn't matter what indicator telling you to buy. It doesn't matter what indicator is telling you to sell. You got to make sure that you are focusing on creating habits that's setting you up to win. If price get past this level, I'm out. If price never gets to this target and it stays above, then I'll stay in. Whatever your plan is, you just want to make sure you keep doing it over and over again, creating winning habits. If you take an L in the play, take what you learned from that play. If you take a W in the play, take what you learned from that play. Compound it. And take it into that next play. Okay, I did this in that last play. I won't do it again in this play. If it worked out, then this is what I'm going to keep doing in this play. You got to keep adjusting your plan until you become the trader that you want to become. You got to keep adjusting your plan so we can build these habits for us to be successful and not be a part of that 99% that fail. And we're not going to be a part of that 99% that fail. We're going to keep getting at this. We're going to keep doing this. We're going to keep learning. And we're going to keep adjusting. But until next time, I hope this video was helpful and that it guides you along your trading journey. If you have any questions, feel free to DM me. Or you can drop it in the comment section below. I promise you I will answer. But until next time, I thank you for breaking bread with me. You guys stay blessed.